And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. And it is another scorcher out here, super hot. So besides Bitcoin's price action and what the market is likely to do based on the current trend, I'm going to first jump into some crypto news. So University of Cincinnati just added Bitcoin and crypto to the curriculum. I've been telling the schools to do that for so long now. As the cryptocurrency space expands and digital assets become more and more adopted as a legitimate alternative asset, educational institutions are becoming increasingly interested. And they said, quote, "Thanks to Dan and Woody, our students will gain hands-on experiential education in this new frontier of financial technology. Our students will learn how to manage cryptocurrencies and how such digital assets impact our economy, positioning UC as the regional leader and among the top universities nationally with this kind of program." That's a genius idea. I think every school should do it. They should do it in high school. They should do it in middle school, because anybody who doesn't learn cryptocurrency, you're just going to be left behind. Next piece of news: Binance partners with soccer legend Cristiano Ronaldo to launch exclusive NFT collections. This is amazing. I love Cristiano Ronaldo. Great guy. So he's one of the greatest soccer players in history, with 5 Ballon d'Ors and more than 800 career goals under his belt. The Portuguese forward is loved by many and has more than 550 million followers on Twitter and Instagram. So here's the tweet here from Binance. It says, quote, we're kicking off an exclusive multi-year NFT partnership with football legend Cristiano Ronaldo. That's pretty cool. And so you see more and more NFT news. Yesterday it was eBay. The day before it was Lotus Cars. Who's going to be next? Okay, what's next? UK inflation hits new 40-year high of 9.1% as food and energy prices surge and persist. So they're actually ahead of the United States. We're at 8.6%. Canada just came in at 7.6%. And guess what? Every month inflation is increasing higher and higher and higher. So what is the old saying? The trend is your friend till the end of the trend. And guess what? I would expect the next Fed meeting, they're going to come out and say, what? Inflation is coming in higher than expected. So here's what London said. UK inflation at 9.1%. It says it's soaring because of food and energy prices, and it continues to deepen in the country's cost of living crisis. The 9.1% rise in the consumer price index released Wednesday was in line with expectations from economists in Reuters, polled and slightly higher than 9% increase recorded in April. So I'll leave a link to these articles in the description if you want to go ahead and check them out. Let's jump into my favorite part of the show, and that is Bitcoin's price action. I'm going to throw this thing up here on a daily. Started out on the daily. And yesterday, wow, we had quite a nice girthy red candle to the downside, and we're getting a bit of a backfill. That's completely normal. What would I say here on the daily? So we got volatility maxed out. We've got momentum crossed to the upside, and we do not have any drives of bullish divergence. So nothing confirmed. We're just making lower lows, and RSI is making lower lows, and there might be a slight drive there that, I don't know, is that a higher low right there? So what is bullish divergence? That's when price is making lower lows and RSI is making higher lows. So we would technically have, from this point here, we got 2 drives. So I go based off the 3-drive philosophy. 3 drives of bullish divergence is going to give you a shot to the top side of the range, which is coming in right here at about 23,000. So, and that's kind of in line with exactly what I'm expecting, exactly what I said in my morning meeting today. Bitcoin very, very likely does something like this. I'm going to draw it out for you. Very likely, we play out one more little downside leg, scare everybody one more time. I think we're going to come in probably around 19.3 or even as low as 18.5, something like that. And then we're going to get that shot up because we need that third drive of bullish divergence. So what does that look like on the RSI? Okay, we come back up here and then we put in one more slightly higher low like that. And that would give us 3 drives of bullish divergence. And that would give us, technically, you want to get a shot to the 21. That's the 21 exponential moving average, which is coming in, and it's going to be descending like this. So where does that come in, and where does that most likely happen? When does it happen? That's the question. When are we going to get the bounce? And I'll tell you what, I think it probably comes in first part of next week. Tomorrow's Friday, so who knows what's going to happen tomorrow. And for that, let's take a look at CMEs, the Bitcoin CME futures. That is the chart to rule them all. The professional traders are on the futures market. And you can see here, the momentum has not crossed to the upside yet. And what I'm talking about here is this guy. This is our momentum indicator, the stochastics. It is a free indicator. You can get it on TradingView, and you can download a free tutorial in the link in the description below. It says TradingView tutorial. Just click on it. We walk you through how to set up TradingView for free. I recommend you do that. It takes 15 to 20 minutes. Even if you're a novice, even if you've never seen TradingView before, it's really easy to do. And then you can start to track all these assets alongside with us. But as soon as we get a cross up, okay, I'm going to show you some of the results we've had in the past. Here was the last cross to the upside. I don't believe we got very much off of that move. But again, it was a cross as momentum was going, as volatility was declining. So we got this cross right here coming from this guy. I'm going to give you a measure move from this point to that point. That was a 27% gainer, not bad. And then we had this cross. That one pretty much failed. Probably had a 2% gainer, but go back a little bit farther. And this cross right here coming in on March 7th, call it March 21st. And that gave us a shot from this point right here. That was a 15% gainer. Where was another cross down from a low level? You want to see a cross come in from a low level. Another small bounce off of this one was probably about 12%. And it's going to be different. In a downwards market, these crosses are going to give you less of a result. In an upwards market, or in an uptrend, the signals are going to give you better results. But this cross right here, I mean, that was a big one. So again, when I'm talking about coming in from this low level, these crosses are coming in at a 12% read, or yeah, around the 12 percentile read. So there was 1, 2, 3, 4, 5, 6, 7. And I think the average bounce is somewhere around 15 to 20%. So because this market is completely oversold and has been extended, I would expect this bounce to have a little bit more juice behind it, somewhere to the tune of 20 to 30%. Personally, that's what I was postulating, something like that. Okay, so wrapping it up, that's the higher term time frames. Let's jump into the lower term time frames really quick and take a look in case you're trading something like the hourly or the 4-hour time frame. And what do we have there? On the 4-hour, and these are kind of my levels right here, and they probably line up with these Fibonacci retracement numbers. What do you know? They do line up pretty good, right? At the 0.5 at 1960, at 19,681. I would say any kind of a 4-hour closure below there is going to give us that move down to this level at 18,500. At a minimum, we get a move down to 19.1. So, you know, if you are short right now, and this isn't financial advice, I'm not a financial advisor, but I'd be looking to probably take some profits in this zone somewhere between 19.1 to 18.5. Depends on how aggressive you want to be and how far you think the market's going to go to the south side. As you notice, volatility is declining. So when volatility does tick up, and it will cross down, 4-hour Stokes will cross down with any kind of a closure below $2,000. Not quite there yet. I'll have to see what the market does tomorrow. Jerome Powell was on the TV today talking about the same old thing. He's just flapping his jaw and talking out the side of his neck, saying, yeah, oh yeah, you know, we have, you know, the economy can sustain the rate hikes, and we're strong enough to handle the inflation and that whole spiel. And I don't think anybody believes him, but he's got to do what he's got to do to keep everybody calm. So 4-hour time frame. The other thing I am noticing here is the bearish divergence, which will get confirmed with our probably almost fourth drive there. And that should be a good for a move down to 19,200. That's what I'm looking for, is a nice move down to around 19,200. And that is as long as, if we can confirm this as a local high right now. And how would we confirm that? You would have to close anywhere below this point here at $2,283. If we confirm that as a local high, then you will have the, let's see, and I'll draw this out for you so you know what divergence is, right? So these are the highs, right? Coming in. You got 1, 2, 3. Actually, I think it goes back even further, all the way from this point, all the way from this guy right here. You could actually, because that's not really a high. This is not really a high. That's like more of a complex low. But what happened? So price is making lower highs, right? 1, 2. This would be the third one if it confirms. It hasn't confirmed yet. And that's the 3-drive philosophy. So price is making lower highs, yet the RSI, the relative strength index, is making higher highs. So can you see that? I'll try to draw it out a little bit. There's 1, 2, 3, and there's 1, 1, 2, 3. So we have not confirmed this as the local high. And if we do confirm it, guess what? That's when I'm going to look for that move to the downside. Now, how would that idea, we're postulating a move down to about 19,200. How would that get invalidated? And what I would say is this, because you got to look at, okay, what if my idea goes wrong, right? If we get any kind of a 4-hour closure above 21,500, in that case, I would say a little bit of a bear trap, and the bulls are going to take over, and we got a measure move that will probably hit. That'll probably be our bounce target that is right in line with about a 25% gainer, and that would look something like this. Actually, I'm gonna draw it out on a different chart because this is getting sloppy over here. So let me get rid of that. So this is called a descending triangle, and it's a bit of a sloppy one. Almost looks like a head and shoulders, inverted head and shoulders formation, but I'm going to draw it out like a triangle anyways. And you would take these 3 points. And again, what makes a trend? 3 touches on a trend line, that makes a trend, right? So you got 1, 2, we don't even have 3 there. So it's not quite there yet. We got 1, 2, 3. I don't know. I'm drawing it out like this though. So, descending triangle has a 75% chance to break to the downside. Typically, they are going to break to the downside because you're making lower highs and lower lows. And what would that look like? Well, the measure move off of this descending triangle, you take it from the 50%, where it's 50% full, and then it usually breaks right here at the 75%. So when the price action is 75% full, that's typically when it breaks. So we're right in the break zone, probably today or tomorrow. We're going to get that break, or maybe over the weekend. Who knows? But the measure move on this, brings you right down to the lows, actually, down to 17,786. So maybe I'm being a little conservative calling that 19.2 target. I like to be a little more conservative with my trading. You want to take profits early and often. And that's what I'm looking to do. And so in the short term, if I'm wrong and the price goes ahead and breaks to the upside, well, we'll know real quick, hey, we're probably going to get that upside move and revisit the highs around 24,000. And to give you an idea on what kind of a bounce that would be from where we're at today, that is an 18% bounce. And that is right in line with the typical bounces you see when the Stokes cross to the upside from a low level. So all this is playing out perfectly. All this is playing out just as I have been kind of, tracking the market. Hopefully you guys are tracking along with me. Hopefully you're enjoying it. If you did, Don't forget to hit that like and subscribe button. Don't forget to pick up the phone and call us. If you have a question, guess what? We're Bitcoin advisors. We've got a phone number. We've got a website. You can pick us up, ask a question. And don't forget, also, if you're a young person, if you don't have Bitcoin in your Roth IRA or any kind of crypto, you're crazy, right? If you put it in a Roth IRA, it will grow tax-free. So if you're 25 or 30 years old and you want to think about your retirement and you don't want to go down to Bank of America or Fidelity and have some schmoo bear behind the desk try and tell you what stock to pick, well, come on down to Bitcoin Advisors and we'll tell you what crypto might fit your needs. Again, we're not financial advisors. We're not giving any financial advice, but we're offering some perspective on cryptocurrency as we have a lot of experience. Thanks a lot. Have a blessed day and we'll see you soon. Take care.